Bitcoin is up 4x over the past 2 years, rocketing from $30,000 to nearly $120,000. Is now a good time to buy into Bitcoin's biggest bet? Hi, I'm John from ValueGlance.com. I have a PhD in theoretical physics and worked as a financial analyst on an 11-figure fund in asset management. I wrote the book, Stop Checking the Price, which is a simple strategy for finding high-quality, value-creating stocks over the long run. So today we're going to talk about MicroStrategy, ticker MSTR. With Bitcoin making headlines, it's no surprise that the Bitcoin maximalists are coming out of the woodworks to flaunt their gains and double down. MicroStrategy, ticker MSTR, is the biggest name in public stocks when it comes to Bitcoin. The company owns 3% of all Bitcoin in circulation. That's 607,000 Bitcoin for a current value of $72 billion. Compare that with the company's market cap of $118 billion. MicroStrategy's founder and former CEO Michael Saylor has evangelized Bitcoin over the years through provocative statements, and he isn't letting up anytime soon. The company continues to raise money to buy more Bitcoin and is now looking to do a $2 billion raise through preferred shares, promising an initial 9% dividend. In a recent interview, Saylor prognosticated on who would control and dominate the Bitcoin future, saying, "The biggest users of the base layer would be Apple and Google and the US and Bank of China and Bank of Russia and Bank of England." For a cryptographic technology promoted as digital gold, having so much control rest in the hands of a few powerful commercial banks, tech giants, and state-connected entities seems to be the exact opposite of the original intended purpose. But nonetheless, as long-term investors, we don't need to bet on whether Michael Saylor's crystal ball gazing will come to pass. While the stock is seen as a buy into the Bitcoin reserve, we can still view it as a stock at the end of the day. It's a slice of ownership of the business, of the assets and claim on future earnings that the business generates. So let's put crypto price speculation to the side and analyze MicroStrategy as a business. So the question we want to ask and answer is whether or not MicroStrategy is a high-quality business creating long-term value that can be purchased at a reasonable price. So let's start off by doing a quality analysis of MicroStrategy. So here we are at ValueGlance.com and we're plotting the ROIC compared to the cost of capital. So the ROIC is shown in blue, going back 10 years to give us a long-term perspective. And in orange is the weighted average cost of capital, or the WACC. And from Charlie Munger's long-term investing formula, we know that a high and steady ROIC maintained for decades is the key to long-term value creation. And so from our key quality metric, we see it has dropped below the cost of capital, and post-2020, after MicroStrategy's Bitcoin buying spree began, the ROIC has only gotten more negative. And so by this metric, we would say the business is actually destroying long-term value. The flip side of that, as we've seen before, a high ROIC above the cost of capital means the business is creating long-term value the more it grows. More goods and services are provided for customers, and that translates into a high and steady ROIC. In this case, for MicroStrategy as the Bitcoin reserve, we do not see that fingerprint of a high-quality business. So what about growth? So we could come down here and add in revenue and invested capital and take a look at those. And so we see on a log scale, revenue in green has basically stayed flat. At the same time, invested capital here has shot up. So again, post-2020, the Bitcoin buying spree began. MicroStrategy raises equity and debt from debt holders and shareholders, that capital, to go and buy more Bitcoin. And we see that shot up from less than $500 million to $33+ billion. So a massive increase in invested capital. However, none of that invested capital increase translated into more revenue by providing goods and services for customers. And so all of that invested capital through the Bitcoin reserve is not being put to work. And so by this definition, MicroStrategy is not the high quality business, compounder type of business that we've studied in the past. In fact, in 2024 alone, the business raised over $20 billion of capital to buy more Bitcoin. That capital won't go to work creating more value for customers. Instead, it will continue to dilute shareholders while the company accumulates more Bitcoin. So we've seen how MicroStrategy uses debt and equity raising to expand its invested capital and buy more Bitcoin without translating that into revenue and ultimately profits as a business. We can compare these two numbers, the revenue and invested capital, by taking their ratio. So this is called the sales to capital ratio. And it's a simple metric that tells us how well the business can convert that invested capital, the debt and equity it raises from shareholders and debt holders, into revenue. Now, a low sales to capital ratio is typically associated with capital intensive industries. So think of real estate or energy companies, utility companies. Let's take a look at a few examples using the latest data from last quarter. So we have NextEra Energy, ticker NEE, which had 6.2 billion of revenue compared to 139.6 billion of invested capital. That's a 4.4% sales to capital ratio. Okay, that's energy. What about real estate? So Prologis, PLD, 2.2 billion revenue compared to 92 billion invested capital for a 2.4% sales to capital ratio. Coin. So let's throw in a crypto one. It's not a Bitcoin reserve. It's an exchange for cryptocurrency, but nonetheless, let's take a look at its sales to capital ratio. 2 billion revenue and 14.8 billion invested capital for 13.5%. So where's MicroStrategy? 111 million revenue compared to 33.6 billion invested capital. That's a 0.33%, less than 1% sales to capital ratio. So that's telling us how well, or not how well, how poorly the business is converting its invested capital reserve into revenue, less than 1%. So the question we have to ask ourselves is, what is this disconnect? This is raising Bitcoin, acting as a Bitcoin reserve with massive amounts of invested capital, but not translating that into revenue by creating value for customers through goods and services. So this is not a business that is outpacing the competition, coming up with a clever new innovative business model, providing a good or service that customers are in great need for and are demanding, and only MicroStrategy can provide. Instead, this is a leveraged bet on Bitcoin price speculation. And we've seen that through our key quality metric, we've seen that through our key growth metrics, and through the sales to capital ratio. So MicroStrategy clearly doesn't satisfy our definition as a high quality business that's reinvesting profits for growth to create even more value for customers. Instead, it remains a Bitcoin roller coaster, not a long-term value creation machine. So what do you think? Will Bitcoin remain king? And is MicroStrategy a good bet now?